Good morning, everyone. Welcome to the Hurley Investments Trade Findings and Adjustments for Thursday morning, the 25th of June. We are nearing our end of the month. We have rebalancing coming up, the quarter rebalancing. We had quadruple witching for options. We have a lot happening the end of this week into the next week. And today, quite a few people said from last week, hey, we enjoyed Keeves trade findings and adjustments. He just answered questions. Could we do one with you? And of course I said, of course we will. Let's go through it. So please have some questions ready. Anything you want to ask about the stock market in general, please send my way. But I had 4 questions that came in via email. And I thought it might be helpful if I went over those as well. The first one that came in, Kevin, what is your trading strategy? And of course, you know, for me, I'm a caller trader. And people ask, well, why? Why are you caller trading? What causes you to want to caller trade? And really it comes down to nothing more than I'm an emotional person. A lot of what I do in sports wise has been emotional. I am an emotional person, and when you lose on a spread trade, it's lost, it's done, it's over with. You've lost. You're toast. When you're losing on stock ownership, there's that mentality that lets me know, hey, I have forever for that to come back. I can make mistakes in collar trading, yet still beat the S&P 500 pretty handedly. I've also come up with a way that I can dollar cost average without having to ask clients for more money. In all honesty, this is how I trade the bulk of my retirement, is collar trading. I also use leap long calls. I'm following a historical bull market, so I want to use leap long calls to leverage my money. All of this comes down to I look for and trade simple truths, and that's kind of a unique term to use in the stock market. Simple truths are highly probable movements within the stock market. I should probably change that to equities, ETFs, indexes. I mean, there's a lot here that involve simple truths. So of course, the next question that I always get, right, happens every single time. What are simple truths? And those come down to overbought and oversold. When you're overbought and you're oversold, there's going to be a mean or a reversion to that position. Now, if I go ahead and I spread this one out 8 months, it doesn't mean that I've got the exact timing. And I'm going to go over the couple comments you made the other day about timing. It just means at some point in time, when you're overbought, you're going to have, even though you're overbought, from right here to right here, you're going to have a pullback. I don't know when. It's foolish to think you can figure out when. But the simple truth is when you're overbought or oversold, there's going to be a revision, a change, a movement off of overbought or oversold. So that is one of my simple truths that I trade on. Earnings offer the most consistent, and I'm going to kind of say this way, big movement Big movement opportunities. Now, I'm not saying that an earnings offers you a 20% increase. What I am saying is why. What I am saying is that it offers those big movement opportunities up or down. I'm not trying to outguess. I understand that, in all honesty, it is impossible to outguess the stock market when it comes to specific. Boy, I really need to learn how to spell, huh? Come on. Specific timing down to the day. Which is why it's so stupid to day trade. Those people that think they're seeing market movements and chart patterns on a day trading, minute by minute basis, they're idiots. They're idiots. It's impossible to outguess the stock market when it comes to specific timing down to the day, let alone the hour, the minutes. You're an idiot. But earnings offer those most consistent big movement opportunities. For that reason, we do protection, especially at earnings. It's highly probable a stock will move 10% or more in a single day on an earnings announcement. You don't find that the other 361 days out of the year. It's not on a specific date. So I'm looking for those simple truths that help me move certain directions. When you hear historical bull markets, you should be playing primarily bullish trades. Stock ownership, bull calls, long calls, leap long calls. I use the leaps because historic is over a 10 or 12-year period of time. It's not a 2 to 4 week period of time. It's not a 1 week period of time. It's a historic. So I want to give my time to be part of that historic bull movement. Simple truths are all over the place. A person just asked, and this is a little off kilter, but a question just came in here and says, Kevin, why do you use, I'm assuming it's pivot points in Williams %R? If 80% or 84%, I don't know what it is exactly, but if 80 some odd percent of people are using, in all honesty, so I'm regressing here. Here we go. 80% of all technical analysis is off of an RSI, some type of crossovers in the MACD. Why do I use the 50 and the 200 day on my MACD? Because I'm following big money. I don't care about retail day traders. I don't care about a 5 and a 20 when it comes to seeing market movements. That's not important unless you're going to follow the 1% of people that are retail traders that are putting money into the market on a day. The RSI, it's a simple universal, a 14-day RSI chart is a simple universal chart that's used by big money to find levels of placing a pre-approved Securities and Exchange Commission buy or sell order in blocks, which means their orders are 10,000 shares minimum per block, right? The least they could do is put in an order for 10,000 on a single trade. And the MACD 1226.19 is a pretty universal confirming oscillator to verify a bullish signal on some type of crossovers on your daily chart and your RSI. I've added 2 more. I use the pivot points. If you're going to trade options, I found that pivot points work better than a 5 and a 20, a 5 and a 9, a 15 and a 30. I found the pivot points are more accurate when it comes to making my decisions on entering and exiting trades. So I have another indicator, the pivot points, that I feel helps me for my personal option spread trading do quite a bit better when it comes to making decisions. And then the Williams percent R is actually significantly different than the RSI, because the Williams percent R is a medium stochastics type of chart that's actually tracking the movements of big money. So when I see my Williams percent R get to an overbought and oversold, I'm really paying more attention to the oversold, because that's an indicator that big money is going to come back in. I haven't figured it out, but it does relate a lot to the purchasing and selling of the mutual funds. In some way, shape, or form, the Williams percent R is more accurate than a slow, fast, or medium stochastics, and it's more directly related to big money on their purchasing and selling positions within a stock. So it's kind of a one-off that I'm looking for on the Williams percent R. But that's why I set my charts up this way. A lot of people say, well, shouldn't you have a shorter term crossover? Again, the crossover can be a 5 and a 9, a 9 and a 20, a 5 and a 15, a 15 and a 30, a 10 and a 30. There's all kinds of, hey, we find these weird technical setups. I have found that being more accurate than a crossover has been the pivot points for entering and exiting trades. And so I use it accordingly. The neat thing is you get to use what works best for you. And that's kind of the benefit of what we're trying to train you for, I guess. It's, hey, this is what I'm doing, but you need to find out what works best for you. A lot of people ask me, well, why don't you follow Jeffrey Dunyan's trades more closely? It doesn't work for me. There's nothing that Jeffrey Dunyan is doing that will make me a better spread trader. Jeffrey is really unique. I haven't seen anyone that has found a better way to adjust trades than Jeffrey. He's phenomenal at it, and I'm never going to be that way. Jeffrey Dunyan is a master at some of the trade setups. Even though they don't go the way he's supposed to, probably 50% of the time, he also has a very unique way of looking at an adjustment strategy that I just don't have. It's not in me. I get emotional, I get frustrated, I get angry. Real emotions that real people deal with when it comes to trading in the stock market. So I don't try to be him. I'm going to be me. A comment was made, Kevin, should we take profits on Boeing, yesterday at the close, because Boeing had fallen quite a ways. Now remember, most of the time for puts, you have to decide what those puts are protecting. So when I was asked the question, should we take puts off of Boeing, my initial comment was, hell no. Not even a chance. There's no reason to take puts off of Boeing. It's right on the median line, slightly bearish, which means it can fall down to an oversold category. We are between our 50-day and our 200, which means it can definitely fall down to 154, 66. We broke through a pivot point, which means the next one's down here at 63. The only positive, hey, we're oversold, but I've seen that on Boeing for a while when it comes to institutions. That long put is not an option that's a standalone option that you're just taking a big profit on. The long put is usually, and in most cases, protecting stock ownership. I don't care about profits on a long put when I'm protecting 10 times the value of stock ownership. I need to protect that stock. That's what a protective put is. It might be called a long put, but it is a protective put. It is a protective put for stock ownership. I don't care if I make any money on it as long as it gets me through a period of time of stock volatility that I can have my stock protected. So, should you close profits on long puts? Hell no, if it is a protective put. A standalone long put, you could obviously take a profit, I gotta spell right, profit of 100% or more. But when it is a protective put, the stock ownership is the risk in the trade, not the profit nor cost basis of your put. It's a good question. A lot of people take a look and they're just like, oh my gosh, Kevin, I've got so much money. There's so much money in that long put position. I want to take that profit. And I've been there. It's a matter of training your brain. Oh, I've got 100% return on the long put, which is true. On a $20 long put, you could have $20 of profit in it right now. But again, you have $19 right now of potential losses to the downside. Or you have another $53 of potential losses to the downside on your stock. Or you have the opportunity all the way down to the lows at 89 of having an $86 potential loss on the stock. I'm not interested on a 20% profit on a long put when I have risk of another $19 to the downside, $53 to the downside, $86 to the downside. That protective put is protecting my stock. I don't ever even have to be profitable on it as long as it protects my stock. The stock is the bulk of the risk in the trade. So that gets back to, well, when do you take it off? So the short answer is we were close to taking it off right here. An update, it's bouncing off of a pivot point. Let me try that again. Let me erase that. Let me go to the highlighter. Boom. Really close to taking it off. Let it go another day. Oh, really close. And then because I waited 3 days, fell through the pivot point, even lower today. I'm looking at taking it off, in all honesty, somewhere around the 163, possibly the 156. We could be testing that 166, but I don't know. And I'm okay missing an up day or two, as long as I don't have a big down day or two that looks something like this, or something like this, or this, or this. Gap down, horrible. There's a lot of risk in Boeing right now. So, plain and simple, protective puts, you need to remember what they're protecting. It is not a leap for a single position on its own. Kevin, why do you collar trade? I think I went through that up above, but really it comes down to I'm an emotional person, hate losing, overly competitive, and I've worked too hard to lose money in the stock market, which is one of the reasons, again, I'm not a primary spread trader. Jeffrey had a worst trade happen to him in the last year. Maximum loss after a couple of adjustments. I think from the initial trade, he increased the loss by 3 times. It happens. For his track record, to have one in this period of time, freaking amazing. Again, Jeffrey is an amazing spread trader that looks at it's phenomenal how he looks at his ability to adjust. Ridiculously impressed. And that's the type of person he is when it comes to his trading. With that said, it would eat me up. That stupid loss, I wouldn't be able to shake off. It would piss me off for weeks, which would then affect my family, my kids, my trading, my relationship with you guys. I need to be able to lose and still win. I need to be able to make a mistake and still win. I need to be able to really screw up, but still have a way to pull it out in the end. And that's where collar trading comes into place. That's why I do what I do. I do that because, in all honesty, trading is frustrating. Trading is not easy. Trading is about as difficult as it comes. So for that reason, we need to be smart in how we look at trades. We need to find a way that works for you. The whole thing that conjunction with Jeffrey having a registered investment advisor, being able to give you guys real trading suggestions on real positions really comes from nothing more than, hey, let us help you find what's comfortable for you. Let us help you become the trader that you want to be. Let us help you do the best you can on being profitable in the market. And you know what? If it's not us, so be it. Good luck with something else. And we don't mean that being rude. That's not an ultimatum. This is not for everybody. The funny thing is, I've gone through everything, so I will tell you, even though it's not for everyone, it's the smartest thing for everyone. Right? This might not be for everyone, but it's the smartest thing for everyone. But sometimes it takes longer for people to realize that. Sometimes some people just don't get it. And they're never going to get it, which is okay. I mean, that's what makes the market the market. I'm going to say this tongue in cheek. There's always some idiot on the other side that thinks they're right. There's always some idiot on the other side that thinks day trading is the way to go. That'll help fill the opposite side of some of my orders as they go back and forth and back and forth and back and forth. That is okay. Those idiots, those dummies, those foolish traders, those foolish individuals, they make my market because they'll place the other side of my trades. I appreciate them. I'm grateful for them. I'm sorry for what they're doing to their family, though. I'm sorry for the lack of profitability where they're never profitable. They're always profitable on a single trade, but they're never profitable on their portfolio. It sucks to be them. I call or trade because I can make mistakes, yet still be profitable. I can understand I'm not going to outguess the market, but I can still participate and be profitable. It's what I do. With that said, some people asked with the Woo flu numbers going up, do you know of any good stay-at-home trades or stocks? It's funny because, you know, you're going to hear Zoom, you're going to hear Netflix, you're going to hear Nvidia because people love it. You'll hear Alibaba and you'll hear Baidu because they're overseas. Apple because you can buy stuff online. Amazon, you'll see that there's some overlying tech stocks that are making our stay-at-home opportunities easier. You know, I would put Walmart in there because you can now shop online on Walmart, Target. Costco's doing good, shopping at Costco online. There's a lot here that's available. It's common sense. It's really common sense. Common sense in the regards of, if you were at home, what companies would you still use? With that said, look for news stocks, meaning today the banks are up. Goldman Sachs, Morgan Stanley, JP Morgan, they're all up big. Why? Well, there was news that the Volcker rules were going to be, how do I say it, loosened up. Easier for them to lend money, easier for them to move money around. Home stocks, right? They're getting crushed today because, plain and simple, unemployment was leading to more cancellations of people buying homes. Disney down because they're not going to open up their California theme parks past the July 17th when they thought they would. There's just those type of news that can move your stock for certain periods of time. I think if you're going to be home, you need to soak up as much information as you can. And the neat thing is, if you give yourself enough time, what a unique opportunity it is to pick up some stocks that have been crushed. Some of those that I come to my mind, I like JP Morgan, I like Bank of America, I like a lot of the financials. I'm highly curious of Carnival, Royal Caribbean Cruise Lines. What's the other one? Norwegian, I think, cruise line, right? Three that really spark my interest as I think of opportunities there. You can go to some of the casinos. You know, I'm thinking like Las Vegas Sands and Wynn Resorts. What's the other one? MGM Resorts might be it. Some of the ones that are getting crushed right now because there's a spike in the coronaviruses. Obviously, when this passes, they're going to be up to full running again, and they're, you know, you have a buying opportunity. The question is the timing. You can't pick a day, week, month. Sometimes you can't even pick the year. But to see something lose half its value on a virus, it's an opportunity. In fact, to put this into perspective, someone sent me this, and I'm not saying it's not important, but the disease deaths per day worldwide, and this was brought to us by the CDC, the WHO, and it is over 3 months old, so it could be worse than this. I understand. But just to make a point, I'm shocked that this has shut down the world. I mean, the seasonal flu should shut us down each freaking year, comparatively speaking. It's, I'm not sure how much of this is media hype and how much of this is real. That doesn't mean that I wasn't extremely fearful for my dummy boys that were out swimming with people that were COVID tested positive, 3 days later. It doesn't mean I don't worry about my daughter when she has a friend for a birthday that, even though they kept it outside and social distancing, we find out their father has it the next day. It doesn't make it any less scary with what we're dealing with. But at the same time, it doesn't justify the shutdown of the world economy. Nor, and I know someone's going to ask, so I'm going to throw this out here, nor do I have an answer of how it should have been done differently. Because I don't. I don't. I'm still in the camp that it's just a common flu. I think people are idiots for wearing face masks, thinking it's making a lick of difference. But I've got a friend that's a doctor, and she told me pretty simply, anything that's preventative protection should be used. Kevin, even if the mask doesn't necessarily work for the spread, if it keeps someone from touching their face, if it keeps someone from adding the contamination, it's a positive. And that's part that I keep forgetting, just like I told you in trading. If we leave you with any smidget of training, of comments, of suggestions that make you a better trader, it's a win. You shouldn't try to be Jeffrey. You shouldn't try to be me. You shouldn't try to be Keeve. You should try to be you and take whatever insight we can give you into making you be more responsible for your money, even if you're not trading it per se, to have a better understanding of what your money's doing. That's our goal. The goal here is really to educate you, to better help yourself, and to truly not be caught off guard with what's happening in your retirement accounts and in your trading accounts and the money that you work so hard to be in and to earn. We had one question. I think I got that one answered. They said, thank you. Are there any other questions you guys have that you would like me to go over with you? That's what today was set up for. Today was set up for questions that you guys had, that I think there were 4 of you that basically said, hey, we loved what Keeve did. We'd like to do the same thing with you, just to be able to ask you questions about anything. Let me give you here just a couple minutes. I like the way portfolios are holding up today. We'll probably have a very volatile tomorrow, maybe a volatile Monday, and then you'll see zero, for all intents and purposes, you'll have zero volume come through. As people go on vacation next week, Friday, the markets are closed for 4th of July. So it'll be easy to, I don't know, easy to get low volume and maybe no real market movements, or it could cause more volatility, but you'd ignore it. Coming Tuesday and next week, don't pay attention to Wednesday or Thursday, no matter what the market does, because it's low volume, short-lived. I see no new questions coming in. Guys, have a wonderful week. I look forward to seeing you on Monday, most likely from South Carolina. You guys take care of yourselves, and I will talk to you then. Bye-bye.